ESG stands for environmental, social, and governance. These three pillars are essential for businesses aiming to operate responsibly and sustainably in today's world. It's a way for businesses to show they care about more than just profits. By integrating ESG principles, companies can create long-term value for their stakeholders, including employees, customers, and the broader community. The E is for environmental responsibility. This involves actions like reducing carbon footprints, conserving natural resources, and investing in renewable energy sources such as solar and wind power. This means reducing pollution and fighting climate change. Companies can implement eco-friendly practices such as using energy-efficient technologies and promoting recycling programs to minimize their environmental impact. The S stands for social responsibility. This encompasses a wide range of activities, from ensuring fair labor practices and promoting diversity and inclusion to supporting local communities through charitable initiatives and volunteer work. It means treating workers fairly and giving back to the community. Companies that prioritize social responsibility often see improved employee morale and stronger community relations. Governance, the G, is about having strong ethics and leadership. This includes maintaining transparency, ensuring accountability, and fostering a culture of integrity within the organization. Good governance practices help build trust with investors and other stakeholders, ensuring that the company is managed in a way that is ethical and sustainable for the long term. By embracing ESG principles, businesses can not only enhance their reputation, but also drive innovation and growth. It's about creating a positive impact on the world while achieving financial success. ESG, which stands for environmental, social, and governance, is becoming increasingly important for several reasons. Investors are looking for sustainable investments that not only promise good returns, but also contribute positively to the environment and society. They want to support companies that are actively doing good for the world, whether through reducing their carbon footprint, engaging in fair labor practices, or contributing to community development. Consumers, too, are becoming more conscious of their purchasing decisions. They prefer brands that align with their values, such as those that prioritize sustainability, ethical sourcing, and social responsibility. Additionally, regulations are increasingly pushing companies to be more transparent about their ESG performance. Governments and regulatory bodies are implementing stricter guidelines to ensure that businesses are accountable for their environmental and social impact. Companies with strong ESG practices often see better financial performance. This is because they are better at managing risks, seizing opportunities, and building trust with stakeholders, which can lead to long-term success. Moreover, these companies tend to attract and retain top talent. Employees today are looking for workplaces that reflect their values and offer a sense of purpose. Companies that prioritize ESG are seen as more attractive employers, leading to higher employee satisfaction and retention. In summary, the growing importance of ESG is driven by a combination of investor preferences, consumer values, regulatory pressures, and the overall benefits to business performance and employee engagement. As the world continues to face environmental and social challenges, the focus on ESG is likely to intensify, making it a critical component of business strategy and operations. The year 2025 is seen as a tipping point for ESG. Many companies and organizations have set ambitious ESG goals for this year. For example, reducing carbon emissions or achieving net zero targets. Consumers will be even more demanding of companies to act responsibly. Investors will increasingly prioritize ESG factors in investment decisions. We can expect to see several key trends in ESG in the coming years. As the world becomes more conscious of environmental, social, and governance issues, the integration of these principles into business practices will only grow stronger. Companies are increasingly recognizing that sustainable practices are not just a moral imperative, but also a business necessity. This shift is driven by consumer demand, regulatory pressures, and the undeniable impact of climate change. Technology will play a crucial role in measuring and improving ESG performance. Advanced data analytics will enable companies to track their environmental footprint with unprecedented accuracy. This will allow for more informed decision-making and the ability to set and achieve more ambitious sustainability targets. Moreover, the rise of Internet of Things, IoT devices, will provide real-time monitoring of environmental conditions, further enhancing the ability to manage resources efficiently. Artificial intelligence and blockchain can help track environmental impact and supply chain ethics. AI can analyze vast amounts of data to identify patterns and predict future trends, making it easier to mitigate risks and capitalize on opportunities. Blockchain technology, on the other hand, offers a transparent and immutable ledger that can ensure the integrity of supply chains, from raw materials to finished products. This will be crucial in maintaining ethical standards and building consumer trust. This means businesses, governments, and investors working together to achieve shared ESG goals. Collaboration will be key in addressing complex global challenges such as climate change, social inequality, and corporate governance. Public-private partnerships will become more common, leveraging the strengths of each sector to drive meaningful change. Stakeholder engagement will also be essential, as diverse perspectives can lead to more innovative and effective solutions. Transparency and accountability will become even more important. As stakeholders demand greater visibility into corporate practices, companies will need to provide clear and comprehensive reporting on their ESG performance. This includes not only disclosing metrics but also explaining the strategies and actions taken to achieve them. Third-party audits and certifications will add credibility and help build trust with investors, customers, and the broader community. Companies will need to clearly demonstrate their ESG progress. This will involve setting measurable goals, tracking performance over time, and communicating results transparently. Regular updates and open dialogue with stakeholders will be crucial in maintaining accountability and driving continuous improvement. Companies that excel in this area will not only enhance their reputation, but also gain a competitive advantage in the marketplace. The future of business is sustainable, and ESG is the pathway to get there. By integrating ESG principles into their core strategies, companies can create long-term value for all stakeholders. This holistic approach will lead to more resilient and adaptable businesses, capable of thriving in a rapidly changing world. As we look ahead, it's clear that ESG will be a defining factor in shaping the future of business and society.